It's a massive week this week. It's the week of the first rate cuts of the Trump administration. Not the first rate cuts of the cycle, but the first rate cuts of the Trump administration. Oh, hold on. Let me mute my screen here. Oh, I'm getting an echo. I think it's your. Okay, can you on the YouTube? I'm sure on the YouTube maybe you guys can let me know if you guys are getting an echo. I'm not getting an echo. Anyway, so the first rate cuts of the actual Trump administration, and whereas we should all be celebrating, I'm actually worried. I'm going to show you exactly why I'm worried. It's quite a sensitive reason. I think it's very important. So today I'm going to show you why I'm not celebrating the first rate cuts and why I'm actually very worried for crypto on the first day of the rate cuts. So let's do this, guys. Alrighty, the first week of the first day in the week of the actual rate cuts, and everybody's celebrating rate cuts. I'm not really celebrating rate cuts today because of one indicator, and I'm going to show you exactly what that indicator is, and then I'm going to show you how I think it's actually going to resolve and why it is that I'm actually worried. It's not about the fundamentals. It's about something completely different, and that's basically what we're going to be talking about today, guys. Also remember, if you're not already subscribed to the channel, subscribe to our channel. And then, as I said to you guys before, and I keep saying to you guys, I need a favor from you guys. Please, I need you guys to smash the like button, because I know for you it means nothing, but for us to get so much distribution around the show that it really makes a big difference. So please, if you can, just smash the like button. And if you're not already subscribed, you can subscribe to the channel. Anyway, let's get the show on the road. Hardest, can I put my earphones in, or is this still? Oh, amazing. Oh wow, okay, amazing. I've got my sound back. All right, so let's get the show on the road. And you'll realize in a few seconds why we had some echoes and stuff like that if you haven't already worked it out. Let's talk about this week. And as I said to you, this week we are getting the first rate cuts of the Trump administration. And as I said to you previously, it's not the first rate cuts of the cycle, because we did have rate cuts previously in the cycle. Mysteriously, we had those rate cuts just before Kamala was leading the election campaign. Anyway, be that as it may, we're going to get the first rate cuts this week. A lot of people are going to turn around and say that these rate cuts are because of the economy or because of the data. I'm dropping a video on the other channel, and in this video, I'm actually going to break down how these rate cuts came to be. And when you watch that video tomorrow, you'll basically realize that whilst everybody thinks that this is because of the data and everything else, it's actually not. It's actually a genius move between Trump and Bessent, a move of absolute 4D chess. The reality is that we're going to get a rate cut this week. And as I said, most people are celebrating, but I'm worried. And it's not that I'm worried about the fundamentals. It's not that I'm worried about, for example, the dot plot, even though we are actually getting a dot plot. I'm not worried about the actual dot plot. I'm also not worried about the Treasury General account, because we know that Treasury General account is going to be filled. And we know that Powell is probably going to talk about this Treasury General account actually being filled. My concern is not about those indicators. My concern is about something completely different. And in fact, my concern has nothing to do with the Fed. It has everything to do with crypto. And I'll show you what my concern is. So here's my concern. My concern is this indicator over here. This indicator over here is the open interest dominance by open interest. So this shows the open interest or the leverage of the altcoins versus Bitcoin. And what you'll realize is that for the first time since January or December, Monday the 9th of December, for the first time, we've had the altcoin open interest get bigger than the Bitcoin open interest. Now, for those of you who've been following, and for those of you who've been following my videos on the other channel, what you'll remember is that I said that for me, every time, one of the most reliable indicators of when we're at a top is when the altcoin open interest gets bigger than the Bitcoin open interest, right? So for those of you who are not following exactly what's going on, you take the open interest or the amount of leverage that's being taken out on Bitcoin, and you take the amount of leverage that's being taken out on altcoins, right? And what you do is you compare the two ratios. And when the altcoin open interest gets bigger than the Bitcoin open interest, then essentially that is usually a top. So what you can see is that the last two times that this happened, the last two times that this actually happened, it actually marked a local top. not on the day, actually, funny enough. A couple of days later, it marked the top, and then we got massive corrections. The one correction was a 34% correction, and the other correction was a 31% correction, and that is the correction that took us all the way down to, this is the correction that we experienced in the beginning of the year. And what we did is we said, okay, look, 2 data points is not actually enough for us, but let's actually go back and look at 2021. Because the one thing you'll realize about this chart over here, which is available on Coinalyze, is that this chart doesn't go back more than 2 years. So we had to go back manually to 2021. And lo and behold, when we went back to 2021, what we realized is that this information is pretty accurate. When the altcoin open interest grew towards the Bitcoin open interest, that was both of the local tops in 2021. And so to me, this has become quite a reliable indicator. In fact, it is probably for me the most reliable indicator of when we're about to get a local top. And pretty simply, when the altcoin interest gets bigger than the Bitcoin open interest, a couple of days later, we land up getting some kind of correction. And here's the data over here. Now, the interesting thing about this indicator is that if you look at the amount of days that the altcoin open interest remains bigger than the Bitcoin open interest, it's very small. I mean, you can kind of say that here was we touched on Friday, the 1st of March, and by the March 4th, 2024. Let's actually go to the Bitcoin chart and actually look at it on the Bitcoin chart, because I think it's actually going to be better. 𝗏𝗏, are we streaming on the other place? Oh, that's amazing. Yes, that's amazing. Oh, amazing. That's amazing. That's amazing. All right, so let's go look at March 4th, 2024. So this is 2024, and we go to March 4th, and you can see that on March 13th, we actually topped, right? And so what you realize is that the altcoin open interest doesn't stay above the Bitcoin open interest for very long before we actually topped. We touched this thing on March 1st or March 2nd. 2 weeks later, we topped. The second time this happened was November the 30th. So if you look at November the 30th, let's go back to the Bitcoin chart. Let's go to November. You can kind of see it over here. November 30th, about 2 weeks later, December 14th or December 18th, that's when we topped. And so now we're getting this indicator flashing again. And the thing that I don't like is that this indicator is flashing on the week of the FOMC. So it's almost like you want to say to yourself, like, how coincidental is it that this indicator is flashing on the week of the FOMC? And it's not just an FOMC week, it's a dot plot week, and there's a whole lot of other economic indicators. And so for me, I don't like the fact that you're getting this, which I've called the most reliable indicator so far. It's got 100% success in determining when there are tops. And every single time that it actually does that, it goes, we get some kind of correction. And that happens coincidentally on the week of the FOMC. Because then we need to start digging into the FOMC and say, what is it about this FOMC that may actually collapse markets? Now, look, there's some people that noticed this indicator before us. And what they realized, they said, look, I'll give you some of the counter arguments. Just for everyone's clarity, this number means very little. Absolute open interest is the only thing interesting insofar as data underpinning it remains. The only way to look at it is to compare open interest versus market cap over time. So he's arguing that you can't just take open interest, but you've got to look at open interest versus market cap. Don't really buy that argument, to be honest. You can also look at the charts and you can say, look, the last couple of times that this happened, others put in higher highs. Well, the one time it put in a higher high, and now we haven't put in a higher high yet. You could argue that. I agree that is an argument. I'm not buying that argument either. You could also look at the stablecoin dominance ratio, and you can say, look, the last 2 times that this indicator happened, the stablecoin dominance ratio was just around 5%. But I don't think that's an argument. It also worries me that this indicator flashed when the altcoin season index flashed above 75. Now, you'll remember I said to you last week that when the altcoin index indicator flashes above 75, there's a litmus test. And the litmus test is, can it stay above 75 for over a week? And if it does stay above 75 for over a week, then we get the monster alt season rally. And if we don't, then it's a fake out. And we said last week that of the 12 breakouts, we had 6 fake outs and six real alt seasons. So now the big question is, why is this indicator flashing on the week with the FOMC and within 1 week of the altcoin season index actually breaking out? And for those people who are looking for excuses, I'm going to show you the counter argument the other way. Why I think that there are other indicators that are actually backing up this indicator that says that this week may be a very, very, very volatile week. Here's the first indicator. The first indicator is just the plain Bitcoin chart. And what it's showing you is that Bitcoin is at like critical resistance. It hasn't yet been able to break through this critical resistance. This is a massive resistance. This is a resistance that's been here since 2017. And we failed to break this resistance convincingly. And now we're back at this resistance again on the same week as the FOMC. Second thing that's happening this week is if you look at this indicator, which is the NVIDIA versus the SPX. It's been quite a reliable indicator for timing pullbacks in the SPX. As went NVIDIA, so went the SPX. He says, I last posted about this in December 24, and it's firing off again. Now, what else happened in December 2024? This happened in December 24, or November 24. We had this indicator actually breaching. So he says, look, I last posted about this index in December 24, and it's firing again. And it appears that there's now a new sell signal forming if history is any of the guide. He says, when the NVIDIA SPX ratio is in the upper middle panel diverges with the action in the SPX as shown below. In other words, what he's saying is when the NVIDIA versus the SPX ratio goes down and the SPX goes up, typically the two of them go back towards each other. And when they do go back towards each other, he says, well, that's usually when the SPX goes back to and has a bit of a correction. Now, what we do know is if we have an SPX correction, that's going to send us back. That's going to send us back to that's going to send Bitcoin and crypto back as well. The other thing is that this week we have what they call a triple witching. Okay, now, for those of you who are new here or don't know what a triple witching is, it's not when you meet three bitches in a row or three bad women in a row. That's not a triple witching. A triple witching is actually a massive stock expiration. Sorry, I forgot to mention that I'm fasting and I'm drinking tea, herbal tea. It's the only thing I'm allowed drinking, and I've got a hell of a headache. The triple witching is when the expiration of the stock options and stock index futures and stock index options all fall on the same day. It only occurs 4 times a year on the third Friday of March, June, and September and December, which can recreate a spike in the trading volume and volatility. Now, we do have a triple witching this Friday, again coincidental with the same week as the FOMC meeting and the same week as this index over here. Now, generally, a triple witching has been short-term bearish for the S&P 500. You can see what happens the previous day, the same day, and the next day. But more importantly, it's been a very bearish thing for Bitcoin. In fact, in the last couple of triple witchings, Bitcoin's always gone down 25%, 9%, 19%, 20%, 5%, 12%, etc., etc. So, whereas everybody is celebrating this week, I do believe that we need to look at the indicators, and a lot of indicators are actually saying to us that we should expect volatility. Obviously, I hope I'm wrong because I'm long a lot of crypto, but it's always good to highlight that the market's actually, that something may actually happen in the market. And then we should try and probably dig is to see what the hints are that the market may actually give us this thing. So let's talk about what's actually happening in the market, what we can expect from the Fed data, etc., etc. The first thing is, well, we're getting the rate cut, and I think the one rate cut is pretty much a given, 96.2% chance. There's a 3.8% chance of a second rate cut, but we're also getting the dot plot. Remember, the dot plot happens quarterly, and that's where the Fed officials basically put dots on where they think the interest rates are going to be at the end of 2025, 2026, 27, and then in the longer run. Now, this dot plot is very, very interesting. Why? Because we had the jobs numbers revised downwards. Remember, we had the massive jobs numbers revised. There was over 900,000 jobs that actually went down. Well, that's not the first time that it happened. The first time that happened was in March 2024 when they again revised jobs down 818,000. And what happened then was, now work with me here. This happened in March 2024, right? Now, that downward revision happened a long time before the election. Just enough time to give Powell the license to do rate cuts before the election. And that's what the Democrats actually wanted, right? And what you can see is that the last time this happened, they had a dot plot on the 18th of September 2024, just before the election, obviously. And the rate cuts, the September dots were revised downwards, which gave Powell the license to actually start cutting rates aggressively. I mean, not really a surprise, right? It's not really a surprise. So the jobs numbers come out, as you can see. The Bureau of Labor Statistics announced a preliminary downward revision for jobs numbers on August 2021, just before the FOMC meeting. In the FOMC meeting, they revised the September dots downwards, which gives Powell the license to actually reduce rates. And that's exactly what he did. He reduced rates 3 times, or 3 bips, 3 times 25 bips before the September elections, before the November elections. And so now people are saying, well, hold on, if he cut by 50 basis points the last time there was a downward revision, is there a chance that he could actually cut by 50 basis points this time? Now, at face value, that would be bullish, right? If we were expecting a 25 basis points rate cut, and we got a 50 bips rate cuts, that would be bullish. Well, no, it actually wouldn't, and I'll explain to you why it actually wouldn't. We probably want a 25 basis point rate cut, and it's not only Ben Cowan that's calling for a 50 bips rate cut. It's also Standard Chartered. Standard Chartered also came out and they said, look, we also think that we're going to get a 50 bips rate cut in September. The probability is against them, but it is a possibility. And if it happens, it's probably bad for the markets. And I'll show you why it's probably bad for the markets. So the way to find out if there's going to be a 50 or 25 bips, let me just fix this earpiece. I've got earpieces everywhere. Hold on a second. Let me just get this earpiece right. Someone says we're flip-flopping. We're not flip-flopping at all. We're very, very, very bullish, but we do have to present risks when we see risks. Otherwise, we'd just be a Bitcoin fan channel. And if you want a Bitcoin fan channel, you can get my other channel on OnlyFans. I do a Bitcoin fan channel, and you can pay extra money. And then I can go, yeah, Bitcoin's only going to go up. Bitcoin's only going to go up. Bitcoin's only. That's actually a good business model, right? Because I can't take my shirt off. So, I mean, maybe I'll take my shirt off after I fast. All right, so going back to it. So Standard Chartered said there could be a 50 basis point rate cut. Ben Cowan says there could be 50 bips. The numbers are saying to us probably not 50 bips, this rate cut. The place to find out is to go to 𝗥𝗙𝗪𝗏's Twitter page. And 𝗥𝗙𝗪𝗏's Twitter page, which is, by the way, one of the Twitter pages that we actually scraped for the news terminal, right? He will actually tell us if there's going to be a rate cut. So we got to be careful. We got to be careful around what actually happens here. Also, tomorrow, before the rate cuts, I'm dropping a video here to give you my speculation about the rate cuts. You need to subscribe to that channel because that channel is going to break down for you. It's going to be one of the best videos you've ever seen. Anyway, so going back to it, I think what we expect for now, which is what Goldman's expect, is 25 basis points now, and then another 2, or that's what the markets are expecting, 2 more 25 basis point rate cuts. September, October, and December. And they're quite convinced. I mean, there's a 94% chance, a 79% chance, and a 74% chance. We need to be watching what Powell says and what the implications are on this, because that may actually be the first surprise that we may actually get, right? That's the first surprise that we may actually get. Let's talk about the rate cuts and the 50 basis point rate cuts and whether we're bullish or bearish or whatever else. So net, obviously, I'm very, very, very bullish. I'm very, very, very bullish about rate cuts. I didn't know how to verbalize why I'm so bullish about rate cuts. But when I read 𝗙𝗃𝗪's tweet, Adam 𝗙𝗃𝗪's tweet, he said, the Fed is about to add rocket fuel to the fire. Since the 1980s, 100% of Fed rate cuts with the S&P 500 at record highs have led to more record highs 12 months later. Not to mention that this time around, we're in the midst of an AI revolution, which is barely in its second innings. The Magnificent Seven companies are alone investing $100 billion per quarter in CapEx. The biggest technological revolution of our time since the internet will be met with rate cuts this week. And he's saying, look, we're getting rate cuts, in the first rate cuts in the midst of the AI revolution, when this economy is getting very, 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 very heated. And that will send the S&P on a rampage. Also, if you look at this, he says the time has come for the rate cuts. On Wednesday, the Fed will lower rates for the first time in 2025, blaming a weak labor market. This is just the third year since 1996 that the Fed cuts at record highs, right? And generally, he says, look, when the Fed cut at record highs, the market actually starts moving. He says, when the Fed cuts within 2% of all-time highs. The S&P typically loves it. He says in 20 of the last 20 times this happened, the S&P has ended the 12 months later much higher. And look at the numbers here. The numbers are that the S&P will end 13.9 times higher. Now, why am I getting so excited about this? Because A, the data is right. But this time, this cycle, we are much more correlated to the S&P than any other cycle because the ETFs are powering the ETFs and the treasury companies are powering this market cycle. And by virtue of the fact that they're powering this market cycle, well, we are going to become more correlated to the S&P. So if the S&P goes up 13.9% in the next 12 months, can you imagine what's going to happen in crypto? So super, super bullish on the next 12 months. No other way to spin it. However, in the short term, in the immediate term, such as the next 30 days, the results are more mixed. In fact, it's 50-50. 11 out of the last 22 times it's happened, the S&P saw weakness in the short term. And so here we get back to this double-edged sword where we want the rate cuts, but we get the rate cuts and it falls on the same week as this indicator ticks. And the data says that 50% of the time, it's actually really bad. And when you look at the charts and you look at how really bad it is, it's really bad. Especially if, I mean, that is minus 29%, minus 45%, big. Why? Because these were times where the S&P cut by 50 bips, not by 25 bips. When the Fed cut by 25 bips, we went sideways in 2024. The problem came in when they cut by 50 basis points. So now you got to ask yourself why. Why is the market worried that the Fed's going to cut by 50 basis points? And if the Fed does cut by 50 basis points, why will this market take a shit? It's very simple. By cutting by 25 basis points, the Fed is kind of admitting that they may be a little bit late, but they kind of have things under control. If the Fed start cutting by 50 basis points, then the market's going to say, oh my God, the Fed is panicking. They are behind the curve, which is exactly what Trump told us, especially with this jobs revision. And if there's one thing that the market doesn't like, it doesn't like it when the Fed and the politicians are not in control. And so what we need, ironically, is we just want this single rate cut. We don't want a double rate cut. Don't give us dear pal, please don't give us a double rate cut. Why? Because if we get a double rate cut, that's going to be a signal to the market that the Fed is behind. And the one thing that the market doesn't want is it doesn't want to know that the Fed is behind. If the Fed is behind, that's great. Just lower by 25, give us another 25 and then another 25. I'd love a 50. A 50 would be amazing. Problem is I know what a 50 is going to do to that market. And so let's be on high alert. Let's be on high alert for that rate cut. Also, we've got to listen to what Powell says about the TGA account, because remember that TGA account? This is that account that they were spending out of, the Fed was spending out of. It's almost when they had the debt ceiling limit. Remember I did a whole show about it? And then they needed to refill this account because what did they do? Let me just actually move a little bit forward here so that you can actually see this chart over here. Let's just go here, bang. Thanks for playing. Oh man, okay, so let's just, okay, so you can see that what they did was they spent all the money from the Treasury General account. That TGA account was at about $850 billion. And then they spent to keep the economy running while the US debt clock was running up. And now they've been refilling that Treasury General account. And when they refill the Treasury General account, that takes money out of the economy. Now, our calculations say as follows. It looks like they have 180 billion to go if they stick to what Powell said and they refill to 850 billion. We need to keep our eyes and ears peeled on the day of the FOMC meeting to see what they say. Because if they're only going to take out another 180 billion, then we can say, look, the worst is behind us. They've already been filling it up. And that is what caused the market to go down in the last couple of months. And now we should be going up again. However, they may say they need to fill it higher. They may say that they need to put more money into the account. We need to be ready for anything. And that is why on Wednesday, when the FOMC goes live, we're going to be live with you right here on our channel and right here on Pump.fun, because we're streaming to Pump.fun now. Can you believe it? Yeah, there we are. We're streaming to Pump.fun now. Don't buy this coin. This is just a test coin. Please, this is just a test coin. Don't buy this coin. Hey, a big shout out to the guys who are watching us on Pump. I think we were the first major channel to actually stream on Pump. Here we are. We'll bring it to you live. So on Wednesday, we're actually going to do the FOMC meeting we're going to do the FOMC meeting on Pump and on YouTube. So you can watch us on Pump and you can watch us on YouTube. And that brings me to the next thing that I want to speak about, and that is this absolute tear that Pump.fun is actually going on right now. It's been one of our biggest conviction plays this cycle. I showed it to you guys. I called it in front runners many times. This is where our trade was just before the show. I took a screenshot. Sorry, this is just before the show yesterday. You can see that if you got in with us, you would have made 1,671%. That's not the only call that we've made in front runners. We've made amazing calls in front runners. We made another call, or specifically I made another call in front runners, which did a 5x. So here's the original call over here. Okay, so this is the original call over here. Yeah, and yeah, so this is the original call over here. And what you can see is that that call is up since we called it over 5x in front runners. That's two calls. Pump.fun is now at 3x. This is at 5x. There's a whole lot of other calls. Guys, honestly, it's time that you sign up to front runners. Just do me a favor. Sign up for a month. If you don't like it, leave after a month. But sign up for a month because you get all the benefits. I paid off my kids' school fees, Bangkok bird. These are real people, guys. Real people. Someone says, yo, man, your Twitter is hacked. No, I don't think so. It's probably is my Twitter hacked? Probably not. Let's have a look here. No, I mean, my Twitter's not hacked. That was the last piece that I put in here. But thanks anyway, bro. All right, so Pump.fun, why do we have so much conviction? Well, it actually has to do with this streaming product. Because you got to remember what Pump.fun's mission is. Pump.fun's mission is to build a social network that rewards creators more than any other social network. And if you think about being a creator, you can go onto YouTube, and I promise you that you can go onto YouTube. It's such a bad trade going on to YouTube. And by the way, today is our 8-year anniversary of our channel on YouTube, believe it or not. Not banter. This is I started the CNBC channel actually here. I was the first person to bring a televised crypto show to the world with CNBC. And the channel that's now banter was the channel where I used to house the videos. And today today YouTube told us that it's actually 8 years old, believe it or not. So I don't know, big day today, big milestone for us. Okay, so let's go back to Pump.fun. So why am I so excited about Pump.fun? Because the whole world is starting to be filled with creators. You've got kids now that are saying that they want to be YouTubers. The thing is that YouTube doesn't pay very well. YouTube pays terribly well. I mean, I'd be lying to you if I said that Banter made more than $25,000 a month for all our streams and all our streamers on YouTube. And so it's not really a viable model. And I mean, when you talk about Twitch and all the other ones, you don't really make money out of those ones. But Pump.fun has actually found a way to actually make money for streamers. Now, let me explain to you the maths of how it works, right? The first thing that you do is you launch a coin. And then you stream and you link your stream to the coin, just like we've streamed. And we're linking our stream to this coin. Now, guys, this is a test coin, okay? So please don't go and ape into this coin. We're doing it as a test to see if it works, and we'll decide what we're going to do with the fate of our Pump.fun streaming and this coin and whatever else later. For now, it's a test coin. What they do is they take a percentage of the fees that you trade, the trading fees. You take a percentage of those trading fees, and they give it to the creator. And that is probably the most sustainable model that I've ever seen or ever heard for rewarding creators in the long term. It basically says, look, if you can stream and you can get your community trading your coin, a percentage of the trading fees that your community actually generate is going to be used to reward you. And now the man in the street can just start a stream. And that's what Uber drivers are doing. Just listen to this. Hold on, can we, is it playing or not? Okay, it's probably not. Let's just see, did I maybe mute the site by mistake? No, I didn't. Oh, so what you're getting is you're getting Uber drivers. This Uber driver was making a $5 delivery. He made $20K on fees by just starting his camera and actually streaming. And so now you're realizing that you can just switch on a camera, launch a coin, start a stream, and get rewarded, right? And people can trade on your coins. And this for me, may be one of the biggest social media revolutions that's out of there. And that's why I think that if they do actually get this right, if Pump.fun actually get this right, Pump.fun won't be the biggest thing to come out of the cycle. It may be the biggest thing to come out of our generation, because it may be a way to actually really reward streamers, right? And so we're testing it. As I said to you guys again, I'm saying to you guys again, because I don't want you guys to get wrecked. We're not sure what we're going to be doing with our Pump.fun streaming. This is a test stream with a test coin, and we'll decide later what we're actually going to be doing with this stream. It's becoming a massive industry. You can see that, I mean, 𝗏𝗏𝗧𝗏𝗏, who was an early investor in Pump.fun, he says, look, and he's probably right, he says, Pump.fun doesn't need Mr. Beast to win. Pump.fun will help the next Mr. Beast win. And I kind of agree with that, because it's giving access to an absolute new, sorry, I'm getting a lot of messages, probably about our, okay, yeah. Okay, we're getting, also, some of our partners, so Stalkchain has actually built a list of Pump.fun streamers. If you go to stalkchain.com, they show you a list of they were the first guys that I know that built a list of Pump.fun streamers with the fees earned, with the market caps, with the live or not live. And these guys are making some real money. Look at these guys making $130,000. Let's see if we can actually, let's do it the other way around. Okay, $280,000, $220,000 from just streaming, basically. That's basically what the guys are actually doing here. And so it's no wonder that Pump is now valued at an 8 billion fully diluted valuation. And I think it's just the beginning. I think if they get this right, this thing goes to Valhalla. I'm not saying it'll go to Valhalla today or tomorrow, but I'm saying it will go to Valhalla. Okay, so that was the Pump.fun call. And again, as I said to you, that call was I made in front runners. That wasn't the only call, as I said to you. I made the other call in front runners, which was this one over here, which has gone up 5x. And now I'm going to give you another call, okay? Because there is another call, and you need to pay attention because you can all participate. There is a decentralized perpetuals exchange similar to Hyperliquid. It's not exactly the same as Hyperliquid, but it's going up against Hyperliquid. It's a very serious exchange. It's called EDGX. It's not a game. It's a real exchange, and it's called EDGX. Now, EDGX, I know for sure, are doing an airdrop. I can't tell you when, but I can tell you that the airdrop's coming before the end of this year. Which means that if you go and trade on EDGX now, if you open an account on EDGX and you use this link over here, right? You have to use this link over here. You will become eligible for the airdrop. The call here is very simple. You cannot trade their token. They don't have a token. But if you start trading on this exchange now, and it's a brilliant exchange, you can fall in line to actually get the airdrop, just like the Hype airdrop. Now, the numbers here are absolutely huge. I'll give you the numbers here. Hold on. Let's just see if I can get you the numbers, because I actually want to show this to you. The numbers here are huge. Let me see if I can find you the numbers. It's just on one of my other screens. Hold on a second. Okay, I don't have the numbers here, but these guys are already doing massive volume. My recommendation is go now, not now, after the show, open an account on EDGX, use this link, and start trading. Start doing some of your trades there. It'll teach you how to use a decentralized perpetuals exchange, and you will be in line for the actual airdrops. All right, so that's Pump, and that's the amazing calls. Let's talk about some other things. I think one of the other things we need to talk about is Solana. So we all know that the Solana price absolutely ripped. And the reason why it ripped was because they announced that they were going to they raised this treasury vehicle called Forward Industries. By the way, let's see what Forward is actually doing today. FORD, that's the symbol. Forward Industries. 35, okay. So it has come down from its highs. So they announced that Forward Industries was going to be buying $1.65 billion worth of SOL, and then SOL ran up 20% on that news, right? What we can also see is that they have actually already finished buying. So 𝗏𝗏𝗏𝗏 were the company that was actually buying these Solana tokens for the treasury vehicle. And what we can see by looking at their Arkham account is that they've actually finished buying. So 𝗏𝗏𝗏𝗏 has stopped buying. So now we've got to ask ourselves, with this lack of buying pressure, in other words, with less buying pressure, will Solana actually start coming down again? I don't really think it'll come down, or it'll come down a lot. And the reason is because already another treasury vehicle has been announced. It's this treasury vehicle over here. It's called Helios, secures over 500 million funding with Pantera Capital. So they've got 500 million, which is going to come in to buy Solana. They said the digital asset manager is reportedly planning to convert publicly traded company to a Solana treasury firm, tentatively named Solana by raising $500 million and then another $750 million. So already we know that there could be another $1.2 billion coming into a Solana treasury vehicle. So I think that this is like the beginning of a thing. And I read this tweet, which 𝗙𝗪𝗁 actually replied to. He says, the tweet is by Gum. He says, when 𝗥𝗡𝗃 finishes buying Solana, Pantera will finish their raise and start buying Solana, which will drive Solana price up, which will drive the volume of fraud, which will in turn allow 𝗥𝗡𝗃 to buy more Solana, which will in turn cause more volume on Pantera's DAT, and so on. And so what they're saying is it's like the ultimate Ponzi scheme. When I say the ultimate Ponzi scheme, you raise a DAT, you push out the price of Solana, and then another person raises that, that pushes up the price. Because it pushes up the price, your share price actually goes up, and then you can raise more money and start and carry on buying and buying and buying and buying Solana. So I don't think that this is going to, because Pantera have stopped raising, Multicoin have spent their money and 𝗥𝗡𝗃 have spent their money, that the price of Sol is going to go down. But I do feel we may get a little bit of weakness because, again, of all the indicators that I actually landed up showing you. And so this is just giving an indication of the treasury companies that are out there still looking to buy Solana. So these guys will buy about 1.6 billion. These guys will buy about 600 million. And there's a whole lot of other rats and mice. And so this treasury vehicle flywheel has very, very much started to kick off around Solana. Oh, what else? Okay, so another thing, Bitfunded. So they are, I mean, I've been watching the Bitfunded payouts every week, and they're really starting to pay out a lot of people this cycle. I think it's because trading in the upward cycle became a lot easier, and they're really starting to pay out people. They've got the daily profits and losses, and like they were paying at like $75,000, $100,000 a day. Guys, if you want to trade using someone else's money, it's a very simple concept, right? You go to bitfunded.com. It's pretty simple. You go through an evaluation, right? And the evaluation just says, look, are you a good trader or aren't you a good trader? They just want to check who the good traders are and who the bad traders are. If you can pass stage 1 and stage 2 of the evaluation, then you start trading with somebody else's money, right? And then you keep 90% of the profits and they keep 10% of the profits. So if you don't have money and you want to trade someone else's money, then you can either sign up for a $5,000 account or $10,000 account or $15,000 account or $25,000 account. They should actually do $1 million account. That would be amazing. Anyway, if you sign up today, you will get if you sign up in the next 24 hours, for every account that you buy, you'll get another one for free. And as I've said, these guys are really paying out a lot. I'm just giving shit out this show. I'm just giving stuff away. Come on, guys. Let's give some more stuff away. You want some more giveaways? Let me give you some more giveaways. There is a new L1. This is Alpha Plus giveaway. Alpha Plus giveaway. There is a new L1 which is launching. I can't tell you when. Sometime very soon. It can be like in a week, or it can be in 2 weeks, or maybe less. If I say, do you think they'll get upset with me? Let me phone them and ask them. I need to phone them. Okay, I'll phone them and I'm going to ask them quickly if I'm allowed to say when they launch. It's very exciting, this L1. Trust me. This is a big L1. You haven't heard of it yet because it's not on the market. Let's put it on speaker. I wonder if he'll answer. He probably won't answer. He's probably watching the show. I'm giving you one more ring, bro. One more ring. Okay, he's not answering. So if you didn't answer, I tried to call you. Let me just say, I tried to call you. You didn't answer. So I'm spilling the beans. What are the beans? Well, there's a new L1 that's launching next week. The L1 is called OG Labs or Zero G Labs. And this is an L1, a layer 1 blockchain, an EVM compatible layer 1 blockchain that is tailor-made for AI. So this could easily become the AI blockchain, right? Why? Because it's got all the elements on the blockchain that you need. It's got data availability, it's got compute, it's got data storage, all on the original L1. And that's what you need if you're an AI agent, right? So this is like a big launch. This is like a launch that's backed by some of the biggest names out there. And we're partnering up with them. And so what they've done in terms of partnering up is they've said, look, we'll give the Banter fam $20,000 worth of our tokens that you can give away to the community. The only thing is that $20,000 is at the original price, not the price that it comes onto the market. And if these guys are right, then this is going to come on the market way higher. So I'm going to be giving away $20,000 worth of these tokens to the community, and it's going to happen on the day that they actually launch. If you want that, it's so simple. You go and you sign up to 𝗙𝗵𝗏𝗡 because I have to deposit these tokens into an account. Sign up, get your sign up bonuses, and then if you are the winner, I'll select one of the winners and I'll drop, not one winner, I'll select a whole lot of winners and I'll drop it into your accounts. So you've got about a week. Sign up, deposit money, like even if it's $10, just so we know you're not a bot. And then you can win tokens in this OG Labs. I will do a deep dive into OG Labs because I really think that this 𝗏𝗏𝗏 is one of the blockchains that's actually very interesting in an age of AI. But that's not for today. That's for another show. Anyway, to the people on Pump, we'll see you guys again soon. To the people on YouTube, we'll see you guys again tomorrow. Until then, trade well, my friends.